Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is Monday, April 10th, first day of a new week. We're going to jump right in and we are going to take a look at Dick's Sporting Goods today. If you want to know more about them, check them out, www.dickssportinggoods.com. That is their homepage where I pulled this information. Dick's Sporting Goods was founded in 1948 when an 18-year-old Dick Stack was working at an Army surplus store in Binghamton, New York. An avid fisherman, Dick was approached by the store owner to come up with a list of products needed to get into the fishing tackle business. After Dick presented his suggestions, the owner told him he was a dumb kid, and had no idea what he was doing. Dick was upset and promptly quit. I mean, I would probably quit too if I was a kid and someone told me I was dumb. Not a great boss, it doesn't sound like. He went to his grandmother's house where he spent a lot of time as a kid and told her what had happened. Dick's grandmother asked him how much it would cost to build the store himself. Dick said it would cost $300. Oh, how times have changed. You could definitely not build a Dick's Sporting Goods store, even to start the fish and tackle department, for $300 today. His grandmother then went to the cookie jar where she kept her life savings and gave him $300 and told him, do it yourself. Dick used that money and his relentless work ethic to open a bait and tackle shop in Binghamton. By the late 1970s, he expanded his product line to include much of what you find at Dick's Sporting Goods today. So there you have it, little kid who used grandma's money to build Dick's. So the reason we are taking a look at them, they are down 0.61% on the day, closed the day out at $137.10. We are talking about Dick's Sporting Goods Inc., ticker DKS, and they are out of the consumer discretionary sector. 52-week range as low as $63.45, as high as $152.61. So as you can see, much closer to the 52-week high than it is the 52-week low, and that is a huge range here, right? And this is also a reason why I like to start looking at stocks that are near their 52-week range. With such a huge discrepancy from the low to the high, you can see how stocks throughout a year can transition in that price range, right? So it's much better to be getting them closer to their 52-week low than it is their 52-week high, in my opinion. Average volume 1.3 million. Today was 1.17, so a little less volume today than overall. You can see the sell-off pretty much throughout the day. Looks like it started down, actually maybe started up a little bit on the morning, and then clear sell-off throughout the day around, about 9 a.m. A market cap of 11.738 billion. A beta of 1.44, so they are more volatile than the overall market. Price to earnings PE ratio is $12.73, so it is a pretty nice PE ratio, but obviously if you could get them back down here, it would be much nicer. Earnings per share, EPS, is $10.77 per share. That's nice. Earnings date, the next one coming up is May 23rd through May 29th, so sometime in between there. Forward dividend is $2.46 paid out in the year. They are a quarterly payer, though it looks like they pay out some special dividends as well. We'll see that here in a moment. And their current yield is 1.79%. So low dividend yield. You'd want to see some pretty high growth on this one, at least for me. This is a little lower than I like to jump into. Ex-dividend date coming up, or actually just past March 16th, right? So you bought them now, you would not be in line for the next dividend unless they paid out. We'll see that here in a moment. And a one-year target estimate, at least according to Yahoo Finance, where I pulled this information. I am not affiliated, just one of the sources I like to pull information from. They see it as high as $162.95 over the next year, so speaks to some potential upside appreciation. Now, I always recommend getting into the financials of the company. So you want to look at statistics, you want to look at financials. One of the things I like to pull out of the statistics, dividend yield theory. You'll hear me talking about a lot on this channel. So you look at the current dividend yield, right? That is this 1.79. Compare it to the 5-year dividend average. The 5-year dividend average is found right here. If you go to statistics, scroll down, you'll see this where I snipped this out of. 5-year dividend average for this is 2.15. It's currently at 1.79. Dividend yield theory says if the 5-year average is higher than the current, then it speaks to some potential overvaluation. So based on dividend yield theory, this would be potentially overvalued. If this number, the current or forward dividend yield, this 1.79, was higher than 2.15, it would speak to some undervaluation. So potentially, just based on dividend yield theory alone, this is overvalued currently, right? Excuse me, I got an itch on my nose. Now, another one I like to look at in here is the financials, and you go to free cash flow, and I'm looking at for free cash flow. What the dividends are paid out of is free cash flow. You want this growing year over year, and definitely over at least the last 5 years. You can see from 2019 to 2020, a lot of growth, very excessive growth, right? And then down a little bit from 2020 to 21, and then down again from 21 to 22. So I would actually say this is decreasing over time. You know, yes, it's increased from 2019 to 2022, but over the last from 2020 to 2021 to 2022, it's gone down. So I would not say this is growing free cash flow. That's another negative against this one right off the bat. Now, I always recommend more than one source. So another one that I like is stockanalysis.com. Again, you do not have to use any of the sites that I look at. Just I want to show you where I'm pulling the information so that you can go check these sites yourself and you can get an idea of how I go through a stock, right? So based on the 31 stock analysts that stockanalysis.com has had a look at this, they call it a consensus buy, right? They have a low estimate of $144.43. It's currently lower than that now. So if it came back up to this low estimate, that would be a 5.35% increase in the stock price. If it happened to hit their average of $166.21, which is pretty close to what we saw on Yahoo Finance on the previous page, that would be a 21.23% increase. And if it hit their high of $210 estimate, that would be a 53.17% increase. All the while, you could collect that 1.6, 1.7 dividend yield. At least if you, if you bought them now. If you waited for them to go back down, then obviously that would be higher. All right, another one that I like to get in, look at statistics. You can look at the same information here. It's just presented in a little different format. Statistics, I'd go in and look at return on equity and especially return on invested capital. This was a big one for me. I like above 10%. As you can see here, it's at 17.5. So this would meet that metric. Return on equity, some people like that as well. 45%, that's a pretty high one right there. So that's nice to see as well. Return on assets is 11.5. I don't really pay as much attention to that one. I'm really looking at ROIC on this one. Now, next up, we want to see if it has growing dividends over time. We want our money to grow over time. Now, this here shows negative 65.92%. This is a bit misleading. If you go back to December 10th, 2020, you'll see it was 31 cents and some fractions of a penny. March 2021, they jumped up to 36. September of 2021, they jumped it up to 43. Looks like they paid out a special dividend here in September of $5.50. December, they paid out another 43 and some fractions of a penny. Jumped it up again in March 2022 to 48, then 48, 48, 48. And then another big jump. I believe this is their regular dividend payout on March 16th right here. Was $1. So they had a big, either they had a big jump up in their regular dividend, or this is another special dividend. But I believe that is their regular dividend. So I believe they are growing over time, and it makes it look like from this special dividend that they paid back here on September 9th, 2021, this makes it look like they dropped down. So this is why you want to get in and look at more than just the overall numbers. Make sure that you can account for it and say, okay, what's going on? They obviously are not decreasing their dividend over time. They are increasing. Why is this showing negative? I believe that is the reason, right? Nice low payout ratio, 14.50%. So it has a lot of room to expand this dividend. That's probably why you saw this big jump up, and it is a low. So if you figured out what this dividend growth was, there is dividend growth here. It is not negative. It would have to be in the double digits for me to be interested at a 1.6, 1.7 dividend yield, but it is growing over time, and it does have a very low payout ratio. Payout frequency looks like it's on the March, June, September, December timeframe, with some special dividends thrown in, right? This one specifically September 9th of $5.50 per share, which kudos to those who owned it back then. That's a nice special dividend right there. Well, these are quick hitters trying to find value in the market. For this one, I would be a pass on this for now. If it obviously dropped back to that low, back in the 60s, 50s area where it hit its 52-week low, that's where I would be interested. It is too close to its 52-week high and looks a little overvalued in my opinion. I am not a professional stock picker, so take my opinion with a grain of salt, but I would not be a buyer at this time of Dick's Sporting Goods. Do you have it in your portfolio? Let me know. Let me know what you think about it. Did you collect that special dividend? That would be a nice one to know as well. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, hit that subscribe button. Join me on this journey to financial freedom. It really helps me out whenever you do all those things. Hit the notification bell, hit the thumbs up, subscribe, share with anyone you think that might find value, and drop a comment. Let me know what you think of the video. Let me know what you think of Dick's Sporting Goods. Do you shop there? Is it in your portfolio? Is it one you're avoiding since we seem to be entering into recession? I think we've been in recession since about 2019, but I won't get into that. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. If you want me to cover some stocks, go ahead and drop them down below. I'll work them into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing in journey for educational and entertainment purposes. Investing involves risk and money. Should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor. And as a bonus, this is kind of what I look at for my investing criteria. You got to understand the business. Here, you got to understand the business. You want growing free cash flow over the last 5 years and expected into the future. Growing dividend payout ratio of 75% or less. Does not apply to REITs, BDCs, business development companies, or stocks like that pay a higher payout. Check the valuation based on dividend yield theory. That's just a start. You should be doing a discounted cash flow analysis as well, or some sort of analysis to tell you an estimated value for the stock. But this is a good way to just get a quick high level note. That's why I cover it in all my videos. Current yield below 5-year average, hold overvalued. Current yield equal to 5-year is fair value, and current yield above 5-year average is a buy. That would be undervalued. Buy below the my current cost basis. If I own the share, it needs to be below my cost basis or within 15% of a 52-week low. That's when I would look to buy. For financial companies, add an additional valuation based on price to book. You want a price to book of 1 or below. For 4 of the 6, if it's not a financial company, you want it to meet 4 of the 6 to be investable. And if it's a financial company, you want it to be 5 of 7. That's how I would look at whether or not I would be interested in buying a stock. So if you're interested in my investing criteria, there it is. That's a little bonus for anyone who stayed this long. Really do appreciate it. We'll see you in the next one.